Welcome back, traders. Today we're going to be talking about wicks and why they are so important while you're trading. So I use wicks a lot to identify strength and weaknesses, especially around support and resistance, also in supply and demand. So when you see a green candles open at the bottom and close at the top. But for this candle, it has a top wick. So I know that it opened at the bottom, it reached the high of the top of this wick, but sellers came in a little bit and it rejected the price. So it ended up closing lower than the high. So this is telling you that, especially if you have a resistance right here, that the price got rejected and sellers came in to end the day. So you can use wicks on any time frame, but as I'm charting, I'll always use the daily, and this is what I'm going to use today to explain to you guys how to use wicks to your advantage. So for instance, a red candle, this one has a bottom wick. So for red candles, the open starts at the top and closes all the way at the bottom. But for right here, we've seen that a sell-off coming up, right? For this candle came all the way down, but it rejected this low and buyers came in to boost it up a little bit. So if I see this type of candle around support, I'm thinking that we're about to reverse and start heading higher. So again, I do use these wicks to identify what the next candle might bring for the next day. So for this candle, for instance, this spinning top candle, these are what this is called when you have a top wick and a bottom wick about the same size. So for those, what happens is price opens up here at the bottom of the body and sellers take it to the bottom to create a low, but it rejects that low. Buyers step in, they bring it back up all the way to the highs, but sellers come in again. They reject that price and bring it down here, creating this small body with two wicks on both sides, calling it the spinning top candle. So it would be the same thing if it was a red candle, but just flip it. So we would open up here at the top of this body. The buyers bring it all the way up. It rejects the top price, telling you that sellers don't agree on this price. They bring it all the way down and it reaches a new low, and then buyers step in. They don't like this price and they bring it back up, and it ends up closing right here, creating this spinning top candlestick pattern. Wicks are very important to identify where the buyers and sellers don't agree on a certain price. So you can play that to your advantage, especially around your support and resistance and your supply and demand spots. If you had a support right here, you could have easily waited till it comes down to test it. If you see that buyers are agreeing with what you think is about to happen, you can get in, and on the next day, usually when you have a nice bottom wick, the next day you're gonna head higher. But it doesn't happen like that all the time because things in the market can change. But wicks can help you identify whether the buyers or the sellers are strongest during that time. So again, wicks are very important when you're trading, especially around the support and resistance lines and your supply and demand. It is the best way to identify the weakness in the market or strength in the market depending on which side the wick falls in. So I hope this video helped you guys out. If I were to take anything from this video, is that wicks are important to identify weakness and strengths in the market, and also they can be a really good indication of what might happen next because it's telling you when the buyers and sellers are stepping in at a certain price. Guys, don't forget to like and subscribe.